The Chinese rally is taking shape despite some negative data today. What's your view on where Chinese equities move from here? Investors really want to know what type of policy support and stimulus we might be getting moving forward. What's your view?
Thanks for having me, Dan. I think today's market move is accumulation and follow through from last week's measures. I think we've all seen that the economic data, including today's PMI data, has been weakening steadily over the course of the second quarter. And that has created quite a bit of investors' concerns in terms of direction of the Chinese economy. So last Monday, you have the Political Bureau releasing a release to promise support to the private sector enterprises, as well as to boost consumption. And importantly, I think they also removed the statement that housing is for a living, not for speculation. I think that led to a lot of confidence building that some of the measures that has been constricting the sector will be unwound. And we've seen follow through from the NDRC today with the 20-point plan. And I guess we'll see what else they're going to flesh out at the 3 o'clock meeting. But concretely, if you look at the PMI data, that was still a contraction on the manufacturing side. And perhaps more worryingly, you're seeing also services PMI also declining slightly. And I think that was unexpected. But at this point in time, everyone, investors' focus is basically focused on what sort of stimulus measures that may be coming and the fleshing out of the policy supports that will be forthcoming from Beijing.
And what about more broadly in terms of market sentiment and direction across Asia? We've just come through a week where we've seen a policy tweak from the BOJ, rate hikes from the ECB and the Fed. What do you think the end of the tightening cycle, or at least the near end of the tightening cycle, is going to mean for regional equities?
I think for the broader region, the nearing of peak rates in the US and ECB is probably received a welcome news. I think particularly in the US, that's been long telegraphed at this point in time. And with real rates now in the US positive, the Fed could actually hold pat and perhaps not hike any further. And there will be a real constraint on the economy itself. So that has given a lot of confidence, I would say, in terms of if you're not at the peak, we're near the peak of this particularly hiking cycle. And inflation data has been cooperative since the June reading that we can see. I think similarly for ECB, this actually gives, I think, economies in this region helpful in the sense that they may not need to basically continue to hike to defend their currencies. And given real rates now in the region, we are probably also near the peak. And perhaps some of the monetary authorities in the region could potentially pause or even cut. We've seen some economies already cut some of their rates to support the economy going forward. So that is actually a fairly constructive monetary policy outlook for the region at this point in time.